Let's talk about Tesla, stock symbol TSLA. It reported earnings today. It missed both on the earnings side and on the revenue. It was a double miss, and yet, surprisingly, it's trading higher. It's trading about 5% higher than where it closed the day out at, and it has a lot of people bewildered, I guess you could say. It doesn't make sense to a lot of traders, and I grant you this, it doesn't make sense, but that's why I say you don't trade earnings, because even if you have the earnings ahead of you, like if I had the earnings report for Tesla before it ever came out, and I saw what the numbers were, I'd say, oh yeah, I'm going to definitely be short this going into earnings. And what would have happened? I'd be down right now. And so it just goes to show that there's really not an edge in earnings. You can sure enough guess at it, and maybe you'll be right. But in the end, it's really a crap shot, because even if you get the numbers right, even if you know how it's going to turn out, it doesn't necessarily mean that the stock's going to go in your direction. So that's where it can be very frustrating from an earnings standpoint. But what I want to do in this video is also dive into the charts. Where are we at now with this pop post earnings? What does it mean for the stock going forward? So what has been guiding Tesla is this declining trend line here of late. This trend line goes all the way back to the December highs, and it has been rejecting price ever since. Now, it hasn't tested this level going all the way back to late January. So it's overdue for a test, and it may actually get that. If it can make a rally in the coming days or weeks up into the 270s, you'll likely get that test of this declining trend line. You can also make this case that we're seeing a steepening of this declining trend line here. You can go right here and look at it from this angle and say, all right, the trend line has steepened, much like what we've seen with SPY. And as a result, we're looking at a break above that rising trend line and potentially a test back into the 270s to test this declining trend line going back to December. Also, what we have is a basing pattern that's been going on for quite some time. You'll notice where SPY has struggled with the 200-day moving average some, and this basing pattern where it would break out at would essentially be right at the 200-day moving average. So this thick white line right here, that's your base breakout. So what it would have to do in order to confirm this is actually break above this 291, 292 area and be able to hold it. If it does that, you actually have a triple bottom in place with one bottom, two bottom, and three bottoms right there. Going back further, you have major support at this area here. So this support level goes all the way back to October, and each time forming that triple bottom, it has managed to bounce there. Further, we have the rising trend line underneath that continues to support Tesla in the long run. We'll give this one a different color as well, just to shake it up a little bit here. But this teal color here, that has been continued support for the stock going back to the 2020 lows. So if you were to get a breakdown, if you were to get a fade or a reversal tomorrow and it breaks below 220, watch out, because there's not a lot of support underneath this stock until you get to around this 170 area. Now, going to the weekly chart, what's also pretty cool and pretty interesting, it's not overly relevant at this point in time, but if we ever did get a sustained rally that went back to the all-time highs, then you would have to be aware of this parallel channel that we're in. And so far, it has done a great job of rejecting price on the two tests that it has had. So if we get back up to that level at some point, which I don't see that happening anytime soon, it may be years before we see that level get tested again. That's something to watch out for. But overall, just to summarize the technicals, what we're dealing with here is declining resistance in the short term that has steepened, and also in a little bit longer of a time frame going back to December off of the all-time highs, you have another layer of resistance. But if it can get through that level, it still has to break through this base right here. When you look at it from a post-earnings standpoint, you can see we're very, very close to breaking through that declining resistance right there. So while the earnings didn't quite go in terms of reaction the way a lot of people would expect it, including myself, I mean, you give me those kinds of misses, I'm going to expect that the market's going to drive and penalize or punish the stock in a dramatic way. But in this case, it actually reversed to the upside. With that being said, there's a lot of work for it to still do in order to get bullish on this stock again. It's been holding support. That's good. You have that triple bottom that's developing, but ultimately it needs to break through about 3 major layers of resistance that I've outlined in this video. If you enjoyed this video, I would encourage you to like and subscribe and let me know down in the comments below What is your reaction to this earnings report? Were you surprised by it yourself, or did you kind of expect something major to happen? One of the things that I found amazing going into this earnings report is that people were playing straddles were expecting about a 16% move. That doesn't look like that's going to happen unless you just get a mega day tomorrow to the upside. Right now, you're about 5% higher. Definitely not what they need. They need a lot more than that in order to make those options print. Thank you guys, and God bless.